See if we can't figure out how to make some money next week. You with me? Did you make money last week? Let me know down in the comments. If you didn't, you should join our group though, because most of us are printing. If they're on it, if they're actually taking 20 minutes a day to really digest and get in there and really try to learn stuff, you can make money, but you have to apply yourself. You can't just like join our group and think you're automatically gonna make money. You can't just join TD Ameritrade, put in $1,000 into SPY and say I'm just gonna go bull and make money. You have to still apply yourself. The best traders I know are the ones who are obsessed and are crazy. They're crazy about the market. They make a ton of money though. Do you not want to get obsessed about it and still not make money? Do you really like working for someone else? I never did. Prove it. Come on, let's do this, y'all. Help me help you. Next week, let's get right into it. Monday, house stuff. None of the house stuff is probably going to look good for 2 years. Seriously. It's that crazy and that bad. If you don't believe me, look up all the numbers. I've been preaching it for a year now. So far, it's headed south, right? But remember, the reason we're talking about this is to protect you and your family and all that. But you can actually short the house market by buying ticker DRV. Go watch my house video if you haven't seen it. It was like exactly a year ago. Okay? When the house market goes down, that goes up. Monday, we got information on that. Tuesday, we got information on that. Building permits, home builders index. What is that? I don't even know, but it's a home builders index. It's not going to look good. Housing starts. What does that number mean? I don't know. It's probably not going to look good though, which means DRV is going to start creeping up more. Wednesday, existing home sales. Federal Reserve statement. Dun, dun, dun. And then Federal Gerald Powell is going to come and save the day. I don't think he's going to save the day. Remember, he's trying to do that strong arm thing like the last time he spoke, where he just kept it short and was trying to cowboy it up and say, no questions today, y'all. I'm not going to take it. I want him to do a power move so we can rug the market some more because I want to get this over with. I really do wish we were always in a bull market, but it is what it is. It's got to breathe, man. It's got to break eventually to reset, to move the money from Jim to Bobby or Sue. Which one do you want to be? Do you want to be the one taking the money? Giving people exit liquidity? I don't think you want to be that guy. Listen, next week is going to be crazy. Last week was crazy. Most of our plays we did do well. There's only one that didn't go well, but it's fine because I think we're going to have exit liquidity this week for it, right? This is going to be one of those ripside crazy weeks. Everybody is going to be pinned to their screens and ears to Wednesday right here. If they come out and raise it more than 0.75% on the rate thing they're doing, the yield rate, right? Expect the market to get rugged. Expect the market to go down. Have we been over 0.75%? No. Where are they maybe going to go to? Maybe like 1% if they do. Stocks are probably going to go down. If it's 0.75 or 0.5, it's just going to ripsaw a little bit, but it's not going to have a freak out moment because of it. Okay? So it doesn't mean like the first move out of it. If it's 0.5 or 0.75, don't trust the first move after Powell talks. If it's 1%, trust the move because it's probably going to tank and it's going to keep tanking for a little bit. For sure. All right? But watch it. You have to use stops here. You can play this. You can actually get into a bull and a bear at the same time. If you need to learn how to do that, join our group. We're all there helping each other. You can get a bull and bear at the same time and just do a stop above or below, depending on which way you want it to go, right? You can play it both ways and just whatever one succeeds does, the other one gets sold because you programmed your robot to sell it for you. Thursday, it's even worse. Initial jobless claims. It could probably be stagnant, you know. It won't be negative. It's going to be bad, but in the micro look, okay, it's going to be like, oh, it didn't change too much. I think we're going to get a lot of that, right? And that's what a lot of people are talking about. The bulls or the ones who are like, it's okay. They're saying that the numbers aren't skyrocketing right now, right? So they're right. So we don't have like skyrocketing foreclosures yet on houses. We do have skyrocketing unemployment and layoffs for big boy jobs, though. That is happening. Not jobs as a total, because there's still a lot of crap jobs out there. Okay? But big boy jobs, big paying jobs, we are losing. Every big corporation has been laying off tens and hundreds of thousands of people. Right? Sometimes that takes a while to catch up, right? When those people stop being able to afford stuff like Uber Eats or the new iPhone, which is going down, by the way. You know, if people aren't buying the new iPhone, that's surprising, man. Past decade, no matter what, iPhone sales like this, it's kind of going down a little bit right now. Does that tell you anything? So we have jobless claims coming up Thursday. I don't think it's going to be anything too crazy. Expect it though. There will be a time where that stuff does catch up, where all of a sudden we are going to get this just crazy initial jobless claims, where it's going to go up like 5 to 10% month over month. You know, so I just don't think we're going to really get that yet. Same with the housing. You know, I don't think we're going to get the big foreclosures and stuff yet. No, because it takes time to foreclose, right? But people are starting to miss their payments. Don't get twisted. From there, we've got S&P manufacturing, the PMI on Friday. That's big, okay? That's another big number. So if Powell is kind of neutral and is like 0.5 or 0.75, we're probably going to just ripsaw a little bit, maybe a little bit up into Friday. But remember, Friday can absolutely whoop you because we got the PMI coming out. How it's going to react, just wait for it. If you don't want to figure out the numbers, just wait for it, okay? See how the market reacts. See how the market does before. So again, if we're neutral and it goes up to this, I'm probably going to short some more going into Friday. That's just how this stuff works. Let's get the bull case out of the way. Best way to look at it is through a chart by Eloquent Trades. I'm going to put his ticker, his URL down in the comments if you want to join his YouTube here. He's right. What is he right about? The DXY. What's the DXY? The US dollar. The American peso. This is pretty much the daddy to watch. You know, VIX is harder for people to understand, I think. If you can't understand VIX, you've tried, ask questions, you know, but if you still, you know, you can't figure out, you could probably figure out the US dollar. Basically, the US dollar goes up, stocks and crypto probably going to go down. Gold still going to keep going down in price. He's saying, watch it. What's his exact target up here? Go watch his video. You can even fast forward to find it. But he's basically saying we're getting close to the top of the DXY, which means it's still going to go up, which means the stock market's probably going to keep going down. You know, it doesn't mean we're going to, you know, open up Monday or even next week. Even if there is bad news, it doesn't mean that we're not going to rug next week. It doesn't mean that, because nothing really happens perfectly up and down, right? Except for like the March of 2020, it pretty much went straight down. You know, a lot of stuff in like the year 2000 crash, it went just like straight down, and it was done with the bear market in like 9 months. But remember, this is an everything bubble this time. This isn't just overvalued tech. This is the perfect storm for a reset. Watch the DXY. We have a little bit more to go up, okay? If you want to chart that one. That'll be your best bet. His bull for SPY chart basically shows we still have to go down a little bit. He's betting this is his most probable case. We got to go down a little bit. That number is around 3,700, so 370 on the SPY, 3,700 SPX ES, right? A little bit more down. And then this is his bull case scenario. And I am like searching. I'm still searching really hard to be I'm trying to be a positive person, but I want to go with the flow. But I'm having a hard time finding a flow that points north right now. It's just hard, man. Until the Fed stops selling all this stuff to bankrupt the economy. That's literally what they're doing. They're on purpose causing a recession, possibly depression, on purpose. That's what quantitative tightening is, when you have an economy, a worldwide economy completely built on what? Printing money. right? We've been printing money since when? 2008. So technically we've been in a recession since then. Okay? But until that happens, it's very hard for me to be bull. But just because we're in a bear market, it doesn't mean that we're not going to have rallies either. So this is actually still a bearish scenario. It's just the most bullish one I could muster, okay? Because what's going to happen, we're going to go down a little bit more, and then we would do something which would ruin the market and retail investors for once and for all. How would that happen? A little bit more down, and then just rip a face off this and do an A, B, C up, right? Into the end of the year. Everyone would be YOLOing. Everyone would be YOLOing, and Tesla calls right into Christmas. Dun, dun, dun. You know how they like to do that, right? People would be YOLOing. Kathy Wood, man, everyone, she'd finally be talking on the CNBC again and all that. And then what if like December hit, you know? Would that trap the most amount of bulls ever? I think it would, because this last Friday, we had a record number of options contracts. So retail is still YOLOing option contracts, which tells you the bottom's not in, by the way. Big boy private investment stuff from Bank of America, Chase, JP Morgan. Their private clients are still like sitting 70, 80% in equities. In the bottom of 2008, they were in the teens. I think they're like 17% in equities and stocks. The rest was cash. When those guys sell everything, the private investors, right? They go to B of A and say, manage my money, please. When those guys are like, forget that, I'm out, that's when you're really going to want to buy. We're not even close. We are not close to the macro bottom in this bear market yet. So expect this. This would be the nastiest scenario to ruin the most amount of people. The only problem I have with this is it almost feels like it would then take too long for the whole bear market to happen. Because then this is going to put us, if we, on his projections, it would be basically the end of the year, we top, right? December is going to start going down. This would put us into like maybe 3/4 of the way through 2023, you know, and you do have to look at the horizontal actual time of these waves too. It could still fit, but that's a long drawn out bear market. Doesn't mean it won't happen though. More likely scenario in my eyes is we are going to get a decent flush here within the next 30 days. You know, a good one that's going to take out the local bottoms that we had in June. But be aware, you know, once we get down to maybe 37.70, he's saying, we could revert up. So just play like that. This guy Tyler, dude, he's awesome at visualizing stuff. He's in the BitDoctor Discord. BitDoctor, the YouTuber guy, he's great too. Tyler's on there posting stuff like this. So this is like the 2007, 2008 crash to now. It basically looks super duper close. You know, if it's going to follow that perfectly, we're kind of going to ripsaw down a little bit. We're going to have a fake out rally like the one Yolo was talking about. Okay, which is going to be about here. And then what? Massive rug pull down still. Massive. He even brings up and puts below here the VIX, right? We talk about the VIX. If you can't figure out how to chart the VIX, just chart the dollar. But look at this. It's literally following this almost perfectly. Isn't that weird? People say it's different. It is different. Guess what? It's actually worse now than then. So we should expect at least this downfall of what? 56% it went down in 2008. We've only gone down 23%, y'all. That's nothing. We might over 2x that on the way down. The other thing that I need to pay attention to too is the VIX. I mean, we've had these spikes in VIX and we're making a ton of money on these, playing it, but we're not even close to having like a cool spike. Like even back in March, dude, of 2020, VIX went out of control and we printed money. We've only been going up like $10, right? Like $10, $15. Imagine if we like 5x or 3x or 4x from where we're at. Well, that's what happened in 2008. We haven't even come close to doing that recently at all. So until VIX gets over even 50, I don't think we're anywhere close to the bottom. 50 is, you know, 45, 55% of the way up on VIX. We're not there yet, dude. We're not even close. Here's another thing, long story short, we're not at the bottom. People aren't scared yet, okay? This was in 09. Look how far this thing went. You can stop and pause and read this if you want, but I know y'all gotta work in the morning, okay? We're only here. We hit this blue line, so we're in the kind of slightly scared, but we're nowhere close to like freaking out, right? 2000, nope. 88, 73, we're nowhere close to those yet. But the numbers that are already out right now point to us being way worse than any of those economies. And remember, the Fed is not on the bull side right now. They're on the bear side. They want and they have to make the economy crash. That's what quantitative tightening is. Okay? This freaked me out. This totally freaked me out. Check this. The great everything's bubbles. Remember I was talking about back in the day how it was usually like an energy, it was a services or a housing or a tech bubble. This is US on the left, EU, Japan, China. EU and US are sticking out way more. Do you see what's going on here? These are inflation targets. So this is basically how much you're paying for energy, your durable goods, non-durable. Look how even these are. Housing, 25%. Services, maybe 20%. Non-durable goods, maybe 15%. Durable goods, 20%. Energy, 30%. Whatever. You see what I'm getting at? This is an everything bubble. Everything's expensive. People are losing their jobs. Do you get it? Investment banking revenue at JP Morgan, JPM, Chase is headed for a 45 to 50% decline in the third quarter from a year earlier. President and Chief Operating Officer said. If JP Morgan is doing that, what do you think? You know what's crazy? This is CPI. Now, certain areas of the world are known for lying and cooking the books more than the United States. In fact, a lot more. So take this with a grain of salt, but what this is showing is it kind of matches above that CPI looks bad. Okay? It ain't looking good. Pause this chart again if you need to take a look at it. Walmart. This is some grassroots right here, y'all. Walmart and other retailers are canceling billions of dollars of orders. Dude, if Walmart is doing that, and we're not even, people aren't even losing their houses yet. Most of y'all weren't around and were trading or in housing market or anything like that around 2008. If we even get half as bad as 2008, just wait. It is going to get nasty. But remember, we can make money on the way down. You just have to be willing to do it. There's still people who refuse to play on the way down. It's really easy. It's really super easy. You just got to know the tickers to buy, right? And there's like 20,000 ways to do it. Biden says the U.S. forces would defend Taiwan. You got China, and then you got the island of Taiwan, okay? In the event of a Chinese invasion. Remember, Pelosi has been kicked out of China. Why? I'll let you look that up. But it's been years, not just recently, okay? Remember, Pelosi went over and was talking to Taiwan. So we are definitely like cool with Taiwan. Why are we cool with some random island? Probably because we want something. Oh, what do we want? There's semiconductors, little computer chips, little motherboards. Taiwan, ticker TSMC, is also located in Taiwan. One of the people maybe Pelosi visited, but get this, they're also now going to be building a huge plant in the United States in Arizona. So now we're going to protect Taiwan. We don't care about Japan, but we care about Taiwan. Why? Because we care about their chips. And then bringing jobs to the United States. Will it happen? Thanks, Tyler, for giving me this link, by the way. Oh, right around the corner is hurricane season. We need to be looking at hurricane stocks. President Biden declares emergency over tropical storm Fiona in Puerto Rico. Okay, that's gonna hit the Gulf. What happens then? Stocks Pola, PPSI, those might go up. Can anyone tell me why? The other thing we got going on with that is oil. Okay, if they can't pull the oil out of the ocean in the Gulf of Mexico and all that, oil prices is probably going to go up. I still am a macro bull on the black gold of oil for many reasons, but that's just another one. Remember when that happened? Price of gold go up. Okay. This was kind of weird. So a powerful earthquake strikes Taiwan. Killed at least one. That sucks. Someone died. It doesn't seem like a lot of people though. But again, that's what they claimed. And here's a video of a collapsed big old building. I'm sure there's probably at least more than one that died though. If it was strong enough to collapse that big old strong building, I don't know. But you have to pay attention to this stuff now. Why? Because of the whole China-Taiwan drama and the microchip drama. Remember, the big boy microchips that are tied to the QQQ and all that, NASDAQ, it's all tied. It's all tied to that. So we got to pay attention to the earthquakes and the tsunamis and all that stuff coming. Lots of bear stuff. But again, the VIX. The VIX should spike to above 40 as a sign of capitulation among the last of the bulls, right? So this is a big old write-up some dude did. It was good. Wait, let's grab that. And again, reminded me that, dude, here's our VIX chart. If you zoom out, you know, which I find myself not doing, you know, I'll get lost in like the little micro accounts. But if you go ahead and zoom out, it doesn't take you long to see. Let's go to 12 hour. That VIX isn't high at all either. This was in March of 20. Do you think the economy and stuff is worse now than March of 2020? And this went up to 85 bucks then, and we're only sitting at 26, and we're excited trading, making money. You know, 26 bucks. Yeah, man. Dude, look at these ripsaws. Just wait until we get these ripsaws. People are not scared yet, y'all. We are not at the bottom. No way. You're going to convince me we're at the bottom. No way at all. Let's take a look at an ES line here. This is a SPY. I'll come back and look at SPY. Ooh. See that big old box that says buy stuffs? That's where I'll start loading some stuff at spot and just hodling it. Till then, I ain't buying, I ain't trusting nobody. Remember, we could have a spike up, but I still think it's gonna, no matter what, it will be kind of a bear fake out. You know, I guess we could try to put a line on top of this biscuit right here. You know, if we have another bull rally, I don't think it's gonna get higher than like, you know, 4,200, 420. You know, if it does, it will just be the perfect fake out though, right? Because everyone's gonna draw this tortilla on top here, wrap this baby up, squeeze it. Remember what's going to happen? The salsa verde is going to come out, the green candle. Never trust the first out of the burrito here. Short that baby. That's what I'm thinking. That's what I'm thinking. I'm like 90% convinced this ain't the bottom. 95%. However, we are still a little bit hedged in SPX. XPXL. 3X SPY right now. A little bit hedged in that. Okay. So right now, this is live. We're on the daily here. We're about 11 p.m. East Coast time, New York time. Closed daily, red candle. Now this does kind of look like a reversal from Friday, right? But so far we're still red. We don't know exactly how it's going to open. We just don't. Again, I think we're going to have some ripsaw stuff though, because of all the stuff going on this week. What am I going to be doing? You see this line here? It says buy bears. This is what we were doing last week at some point. I was just going ahead and buying more bear around here. But basically, I think any rally, you should just start dripping into bears. That's what I'm doing. But remember, it's okay to keep cash on the side. Like maybe even if you can't be active and you're fully working on all that, and you just know you're not going to put in the time to care about the market, you should only have like 20% max in the market right now. If you're really trading it, maybe 70% in the market, but you still should have about 30% just in case, because you never know. Something crazy macro could happen. I don't know. What if Jerome Powell comes out on Wednesday and goes, you know what? Forget quantitative tightening. We're just going to start printing money again. Japan was right all along. We'd go new highs, right? Just zip up. If that happens, bears out of it. So you can use stop losses and all that. There's some fibs down around here, I'm guessing. These purple lines around 370.64 and all that. I might look into doing flipping some more bulls if we get down there. But honestly, we've been doing some really, really risky intraday and intra-buy day, intra-weekly trades, basically compounding our money here, right? So we did catch a banging short up here. Thank you, Yolo Trades. Eloquent Trades called that out. When it hits 41.51, short it. Okay. Put the thing in, it did its thing, and printed money is ridiculous, okay? Amazing. He knows the exact penny that these is going to happen, right? We surfed this to about here, and since then, though, we've been like just flipping these burgers here. But we're compounding our money, dude. But there comes a point where it's like, I kind of got to just stop compounding, just let it do his thing, right? But again, if we come down here, we start consolidating, go sideways, I don't know. I'm dripping into the bear ETFs and dripping out though too. So when we start going down, I'll start selling some down there. That's just what you should do. How low can we go though? Let me do this, which is very important. Let's zoom out. When you zoom out, you might realize this is March 2020 right here. Here we are right here. We're only like 22% away or down from that. It doesn't even look that bad at all. It looks like we're hardly in a bear market. Just a little correction. How low is this? I don't know. It could test the 2020 March lows, y'all, eventually. Is it going to happen overnight? Probably not. It's going to happen in a week? Probably not. But just remember, don't trust the rallies. Don't trust your friends that are now getting into GME and AMC and all that crap. We're going to get probably some ripsaws. This is what happens in bear markets. Maybe exit up to 80% of your position when you're 80% convinced that we're at close to a top, right? So if it goes up and it's above this buy to bears and it's even higher and you're like, man, I think this is the new euphoria here. Maybe just get in, 20% here, 20% on the next, 20% on the next level up. Check it every couple days. Short it down. You're going to have to figure that out yourself. Listen, I appreciate you watching the video. Oh, before we go, big head and shoulders on Bitcoin. This is, look at that tap right there. Just tapped this at 1866. Now, depending on the DXY, remember, depending on the DXY and the SPY, this would be a perfect time for it to bounce up. But guess what? It's already hit this line many times, heavily. 1, 2, 3, 4, 5 times now. There's a matter of time where this will break this at some point. If it breaks Geo's road to 13,000 of 17,546, it's probably going to 13,000 Bitcoin. If you can't handle downside, use stops. Only use part of your money. Look at that big old buy. Where's this big old buy at? 12,500. 12,500. All right. Protect yourself. Join the group if you need more help and coaching and talking to everybody else. Best group around. I appreciate y'all watching this, and we will see y'all on the next one. Take care.